Tiku, is everything moving to online? Is there still room for human beings in the world of underwriting, or is this now becoming all about automation? Because if it's all about automation, then the winners are the carriers that can use data most effectively and have the scale to invest in technology. And if it's not all about automation, how do you figure out where to use human beings most effectively? I mean, what does it take to thrive in a world that increasingly is blending this digital and physical solutions being provided to the customers?
So first and foremost, I think there's absolutely room in a world where there's kind of coexistence with digital and humans, right? So I think most activities in the flow businesses like auto, home, and umbrella will be online. Increasingly, small commercial will be online. And the reality is customers expect it, right? So even those who are served through an agent channel, they expect it, and it's good for carriers. So in commercial lines where the processes to intake data about a risk, they're, I think, absolutely going to move online because it's not value added for agents, brokers, or the underwriters, just the pure data intake, right? So the challenge in commercial lines, and you've mentioned it as has John, right? There are many products, many classes of business. So the carriers historically have tended to stay away from investing a lot in front-end capabilities because they just assume that it would cost too much to do so. But technology is getting better, it's getting faster, and there are insurtechs like Bolt Penguin who are leading the way, and they're reducing friction and they're creating value in the distribution chain. So I think the value of the underwriting function is tremendous. But more of it will be automated over time, and a lot of it does deal with this kind of non-value added, just data entry and data intake. So their jobs will absolutely change in the future, and they'll have access to more data. And I think the expectations around speed of these underwriting decisions across commercial lines, those expectations are going to increase.
Yeah. So customer experience becomes an important aspect of this. And John, in our discussions prior to this recording, I said to you guys, if you know that you've been underwritten, it's probably a bad customer experience, right? Because you either had to provide more information or your terms and conditions weren't available. For personal lines, underwriting is typically baked into the pricing, right? Which tier you belong in, the selection of the tier. But in commercial lines, that's not really the case. And so in the world of commercial lines underwriting, how can you make a good underwriting decision and still deliver a great customer experience?
Yeah, I think so. So I guess that's the balancing act, and we've talked about the customer experience lens. Look, at the end of the day, insurance companies have to be very sharp with their underwriting and pricing, right? That's a basic. But I think if the technology and the digitization we're talking about and being faster and more accurate because of those technologies, if I can do that more seamlessly, if I can do it quicker so that when the agent or broker sends that quote request in for this big restaurant chain, and by the way, he or she's sending that into 10 other companies, he's shopping it to all of these various carriers. If I can be more efficient in returning that accurate quote faster than the next carrier, I've underwritten, I've priced, but I've also provided that broker with a fast, accurate quote. And I think that's an example of the kind of challenge, we've got to do both. And I think, Tiku gave the example of, extracting all that data. That's exactly an example of the kind of technology that's supporting that type of advancement. So yeah, I think we need to do both. And we are.
Yeah, so when it comes to commercial lines underwriting, it seems like the key is how do we automate some of these tasks so that we can eliminate data entry? How do we easily collaborate back and forth between the agent and the policyholder and the underwriter? And how do we utilize data more effectively? Maybe it's getting different data, analyzing the data more effectively, especially I think for the middle market or the large commercial where you may have schedules of, hundreds or thousands of units, right?
Yeah, I think that's exactly right, and I think that's exactly what's happening, what's starting to happen. Certainly in the smaller, but it's happening on the bigger markets as well. So yeah, I think that's the challenge. That's where this is headed. which is all good news, of course.